Time now for Hot Picks. Our next guest is focused on semiconductors. Here to tell us more about what he's watching is Edward Friedman, Senior Portfolio Manager of Small Mid-Cap Equities at CWB Wealth. Great to have you with us, Edward. And I'm excited to be talking about a different perspective from semis, since there's endless conversation every day about NVIDIA this and Broadcom that. So let's just get into a few names that people maybe know a little bit less about, but you know a lot about, and why they're catching your eye. I'm going to start with Ultra Clean Holdings, UCTT, on the NASDAQ. Can you tell us a little bit more about what makes up this business and why it has your attention?
Sure. Thank you very much for having me, John. Ultra Clean Holdings is a company that produces predominantly gas panels for wafer fabrication equipment. This is in order to produce a semiconductor. The companies use what's called a wafer, which is basically a round silicon plate. And on that, they print electrical circuits by utilizing specialized gas in a controlled setting. Now, the two main customers of UCT, who are Lam Research and Applied Materials, which I'm sure your viewers are familiar with, they produce this kind of wafer fabrication equipment. And what drives the sales of this kind of equipment is the capex cycle of semiconductors, and what drives that is the growth in sales of semiconductors. Estimates say that semiconductor sales are going to increase to around $1 trillion by 2030, compared to $675 billion today, which is a growth of about 8% a year. And they are in the first line of that cycle. So the company, if you look at the stock price dropped quite significantly in the last 2 years, and there's two reasons for that. The first is that semiconductor sales dropped quite significantly in 2023. And second, in 2024, their own sales in China declined quite substantially because China sort of front-loaded purchases of this type of equipment due to a restriction that the U.S. put on them. However, we see this as an opportunity because we believe that these industry headwinds are behind them. And we can see this, and we could see this in the latest report, that we saw margins expand, albeit a little bit, but because they implement some cost cuts, and we'll see more of this effect in second half. And also sales in Q4 are expected to grow for the first time in quite a while. So if you combine that with the valuation, which we think is very low, plus the margin expansion, plus growth in sales, we believe that that is why the stock is one of the largest holdings in our technology space.
Okay, another name you're watching, Tower Semiconductor, TSEM. How come?
Yes. Tower Semiconductor is a company that manufactures analog chips, which are very, very not very interesting in the market because everybody focuses on Intel and NVIDIA, so like digital chips. Now, this company was almost bankrupt about 19 years ago until they appointed a new CEO who is still in the company today. And he took it from a very tough spot of almost bankruptcy to today they have net cash of about $1 billion, and they were almost acquired by Intel a few years ago. Now, why do we like analog chips? It's because for every digital chip that Intel and NVIDIA and the likes produce, they need about 15 analog chips to support it and to connect it to the real world. And this, without the analog chips, these digital chips will actually not be working. Tower, basically what it means, as I said earlier, that as sales of semiconductors grow to around $1 trillion, the growth in analog chips will be exponential. And Tower prepared for this because of their strong financial position. They are expanding capacity in the U.S., including a cooperation with Intel, and in Italy. And if you look at the stock price has been subdued in the last little while, and the reason for that is that they promised growth in the past and did not really deliver. But if you look at the latest report, you see that the capacity is finally coming online, sales are starting to grow, and their guidance for Q3 and Q4 is especially strong. So combine that with a valuation that we think is very compelling. That is why we like the company and we like this the analog space.
And then the third name that we're going to talk about today is Sanmina, SANM. How come?
Yes, Sanmina, when we invest in technology, in the technology space on the semiconductors, we wanted to have the entire supply chain. And Sanmina is sort of at the last in the supply chain. It's an assembly services company. They assemble all the chips together and put it in one big product and then ship it to the final customer. They are heavily exposed to what's called RF mobile, which is an RF mobile infrastructure, which is very, very strong and grows very fast today. Also, they recently announced an acquisition of ZT System from AMD, which will give them exposure to another fast-growing segment, data centers and AI. So we like the setup that the company is the setup of the company, because now they are all in all the growing segment. Now, if you look at the stock price had a very strong run lately because they reported very strong numbers. And sorry.
All right. Really great perspective there, Edward. Thank you so much. We'll continue to watch all those names. Edward Friedman of CWB Wealth.